Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Here is Laurie Bailey with EURUSD currency pair forecast. Let's have a look.
In his Friday speech, Federal Reserve Chair Jerome Powell stated, "Price increases from tariffs may lead to more persistent inflation, and this factor requires constant monitoring," while also noting that demand and supply for the labor force are declining, which overall increases the risk of lower employment. In these key remarks, there was no indication of a December rate cut. As expected, the tone was, "We will cut in September and see the effect." Yet the US dollar index fell by 0.93%. This suggests that the decline was more of a psychological reaction and, at the same time, a speculative move. Bitcoin trades non-stop has already erased Friday's rally with a decline. On the daily chart, the area moved above the balance indicator line. It's a red line on the graphic. But to confirm the breakout, it must consolidate above the MACD line 1.1762, which would open the path to 1.1872. At present, however, the price may slip back under the balance indicator line. A return below 1.1632 would fully neutralize Friday's rally and open the target at 1.1495. The Marlin oscillator has settled in positive territory, so any price reversal could stretch over 2 days. The first sign of such a reversal would be a consolidation below the MACD line. It's a blue line on the chart, under the 1.1686 mark. From there, we would expect further downward movement and a test of support 1.1632.
And we're starting with pound sterling dollar pair with Tin Lao.
On the hourly chart, GBPUSD on Friday reversed in favor of the British currency and showed a sharp rise, consolidating above 76% Fibonacci level at 1.3482. Thus, the upward movement of the pound may continue today toward the next 100% retracement level at 1.3586. A consolidation of quotes below 3482 would favor the US dollar and some decline toward the support level of 1.3416 and 3425. The wave structure remains bearish, however strange that may sound after the rather strong growth. The last completed upward wave did not break the previous peak, and the previous downward wave break the previous two lows. The news background played a major role in shaping the waves we've seen in recent weeks. The news background has already tuned the pair in favor of the bulls, so in the near term the trend may once again become bullish. On the 4-hour chart, the pair reversed in favor of the pound, after bouncing from the support zone of 33.78, 34.35. Thus, the upward movement may continue toward the next 127% retracement level at 1.3795. The hourly chart is currently more useful for traders. No emergent divergences are observed today in any indicator.
That's all for today. See you online soon.